Do you lose money when the stock market drops? How? Why? When do you lose money in the stock market? Do you lose money when the stock market drops? When do you lose money in the stock market? These videos are to help you. Give a person a fish, you feed him for a day. Teach him to fish, you feed him for life. My objective is to teach or coach you about investing. I have a few more articles to show you, but this time to show you another way of viewing numbers and long term. I am beginning to discuss strategies, but wanted to share some history from a different perspective. I will mention these articles to start showing you how, by viewing them in a positive manner, you can grow your money. I have not found much useful information in many articles to help me, so how would it help you? Let me put it another way. My short, individual videos cannot teach everyone everything to make each video useful. A college class lasts a semester. A book has hundreds of pages. So how can my short video teach you everything you need to know about the market? Let's think for a minute about learning a foreign language. Is one semester enough to learn a language? So do you think you can learn about investing in a semester? The answer to the question is yes. You can learn about investing in a semester. However, this does not mean you will be able to time the market. It does not mean the value of your money will not decrease at times. Before I begin, we have entered a bear market. What does this mean? It means you have 20% to rise before entering a bull market. In other words, the stock market will see a significant increase before we enter an unknown period for the bull market. In short, a bear market is one of two opportunities to buy. Yes, buying in a bull market is the other time. Did you understand what I said? This is a common image of a bear market. Did you know that a bear market is a bull market before it is classified as such? Stock markets plunge. We see the worst day since 1987. We experienced stock market circuit breaker trips 2 times on 2 different days in a week last week, and one already this week. 4 circuit breaker trips occurred last week in Brazil, and so far 1 this week. While this is abnormal, it is not a time to panic. It is actually a time to rejoice. These are features in the market to protect you. If you remember, the market regained the losses that day or the day afterwards. This is during the week of the 11th anniversary of the longest bull market in history. 1987, 2009, the longest bull market. This shows the market will bounce back. Do you remember I said a bear market is a bull market before it is classified as such? In other words, a bear market is a pre-bull market. If you think of it this way, you will start changing your thoughts to a positive outlook. Here's an article from 2009. Notice, this article starts the longest bull market and mentions low near 1997. Interestingly, it was a Monday, just like the 11th anniversary. Here we see market gains for the bull market starting from March 2009. Do you remember this chart? You may think the Brazilian market is not as good as the Dow Jones, but why do you think that? Are you basing it on numbers? Did you know the Dow Jones consists of 30 stocks and the S&P 500 consists of 500 stocks? Both of these are in the US market. Does this mean the Dow Jones is not as good as the S&P, or the S&P is not as good of a deal as the NASDAQ? Let's do some simple math to illustrate. Obviously, if the stock doubles in price, it will be an increase of 3.3% and 0.2%. Does this mean the Dow Jones is better to invest in? No. This is more apparent if we view it as the same stock. So, what should you buy? Stocks? Bonds? Index funds? When? How long? And yes, how much? How much is as important as how long. The first part of the strategy is to be aware of the expression, what goes up must come down. In other words, the first part is to make sure you have money available for stocks, not for stocks, but for living. For living. This does not necessarily mean you need cash available. Emergency funds can be equities that you are willing to sell. Emergency funds can be equities that you are willing to sell. For example, if you invested $5,000 and it grew to $30,000, you might sell this for living purposes. If the market drops, you will have cash from the sale. Another strategy is to have $30,000 in cash so you don't need to sell. Which would you choose? There are pros and cons to either choice. There is psychology. There is personal preference. There is how much you have gained on your investments. The first thing you should have noticed is this strategy is one in which you need money to support yourself. This means your income from work or other means is not sufficient without the additional funds. What would I do? I have done both. I started with investing and building my nest egg. Then, I got to a point of wanting to have cash available without needing to sell. I am selling now, at this time. But I sold before the drop. No, I didn't time the market. I evaluated my situation and knew I needed money. So I quit investing to save money and sold some shares to provide additional or necessary funds for this situation. The next strategy is to determine where to invest. I will not discuss real estate because it is based on location, and where I live, real estate is not that profitable. Stocks. A stock is a security signifying partial ownership of a company. Index funds. Funds, mutual index ETFs, are a professionally managed investment of money in diversified in a number of stocks, bonds, and other securities. Bonds, cash, diversification. Remember, a bear rises 20%. The principles are the same regardless of which market you are in. What did you notice about the previous slides? I just realized the significance of what I told you in this video. Personally, I never paid attention to it before because of terminology. This is why changing your view to positive makes a difference. This is a graph of the Brazilian market. If you remember, I told you that I was trying to help Fabricia with investing. My Portuguese wasn't decent, but I could not. It was decent, but I couldn't speak the financial language. My vocabulary was not that advanced. I started listening to Natalia Arcuri's channel, a financial educator in Brazil. Natalia is one I know can teach Brazilians more about the Brazilian market than I can. But as I said earlier, you cannot learn a language in 3 months. I digress. What do you notice about this graph? Did you notice it is similar to the U.S. market graphs? Look at the 2003, 2008, 2016, to name a few. Now, let's apply this to stocks and mutual fund. Which is better equity to purchase? The stock is better in a rising market, but it is riskier, especially in a falling market. Is this important? I would say it is very important when you are beginning to invest. Do you want to put all your eggs in one basket? This brings us to the next strategy, diversification. What do you think about buying the dips? I posted 2 videos from 2 different professionals in a previous video. In the past, I bought during the dips. This time, it was different for me. My strategy changed. I'll provide more details on this later. Diversification, diversification, diversification. You should have learned a lot from this video. Fatima commented on an earlier post how she likes investing also. What you should have learned in this video is that it applies to all markets around the world. However, there are some intricacies I am trying to understand. Do you remember in the previous video I asked if Fabricia should have bought the stock? Do you remember I asked your thoughts on the Brazilian market since it shows a 150% increase? While these 2 graphs are similar in shape, the values are different. The price of Apple in the Brazilian market is approximately half as what the US market. What confuses me is that the dollar value, the US dollar value, is a 5 to 1. 5 to 1, 5 reais to $1. The Brazilian market offers returns similar to the US for Apple stock and probably other individual stocks, companies. But this means money and strategies are much more important to consider in Brazil. Let's remove the bull market from the equation. You can see the markets bounce back. Remember, though, that this does not mean a stock will recover. This is why diversification is important. With this information, would you buy Apple at its peak? Why or why not? You can see here that buying at the peak does not always produce stock gains. This should, however, show you why diversification is important. You should be getting a sense of investing. Does this relieve all of your concerns and fears about investing? I expect your answer would be that it relieves some, but not all. This is normal. It's your money. It's my money. There is psychology involved. I am not asking you because my experience includes losing money and a strategy of not being fully invested to address my concerns and fears. In other words, in the past, I was concerned a lot more than I am now. I had a strategy back then, but a different one. If you remember what I told you, 1987, this is the worst since 1987. If you look at this graph, you can barely see 1987 having much of a drop. Make sure you focus on the graphs, the data, everything, because one little item can make a big difference in the way you view things. As I said, here you can't see much of a drop, but if you remember, there was a huge drop, and this is the worst one since then. If you also remember, I talked about 1997. If you remember, I mentioned 2016 from the Brazilian market. The graphs are the same, at least in appearance. The numbers are different. The Brazilian market had huge numbers compared to our market. Apple stock was half the price in the Brazilian market, but a 5-to-1 ratio. All of these things are important to remember. Times have changed and are still changing. This is an article from 1987, which was published in a newspaper before the internet and online publications existed as they do today. Before smartphones. The market will bounce back, but that does not mean a stock will bounce back. This is the first time I'm asking you to hit the like button, so I know you like these videos. Feel free to comment as well. Thank you, and I hope this helped. Ciao.